Students, now let us continue our illustration. The situation is third situation when the bill is endorsed in favor of a creditor. So we have already known there is an option which is known as endorsement. So there are two parties, endorser, endorsee, according to the situation. Now let us know about what is meant by an endorsement. The drawer may endorse or transfer in general form. Endorsement means transfer of the bill in favor of another person. Being a negotiable instrument, the bill of exchange can be endorsed by the drawer in favor of his creditor by putting his signature on the back of the bill. This is the pro forma or procedure which should be followed for endorsement. The person who makes the endorsement is called the endorser, and the person to whom the endorsement of bill is made is called the endorsee. The endorsee can get the payment of the bill from the drawee. If the drawee fails to pay the amount, the endorsee can claim the amount from the drawer. The endorsee may retain the bill till the due date, discount the bill with the bank if he is in need of money before due date, or endorse the bill to the creditor. This may be the theory part. So it is common. So now let us observe the transactions or entries. The following general entries are to be passed in the books of endorsee. So the transaction may be as follows. When the bill is endorsed in the books of endorsee, the entries are bills receivable account debtor to endorser account. Narration is being bill received from debtor through endorsement. When the bill is honored on date of maturity, so the entries are like this: cash or bank account debtor to bills receivable account. The narration is being the amount received on endorsement bill. So now let us go to the fourth illustration. The fourth illustration, now let us observe. On 1st January 2014, Venkatesh sold goods worth rupees 5,000 to Nagarjuna and drew a bill on Nagarjuna for 3 months for the same amount. Nagarjuna accepted the bill and returned it to Venkatesh on 1st February 2014. Venkatesh endorsed the bill in favor of his creditor Prabhakar in settlement of his debt. The bill was honored on due date. Pass the necessary journal entries in the books of Venkatesh, Nagarjuna and Prabhakar. So here we are having three parties: drawer, drawee and endorsee. So when you come to the solution, we are having three kind of entries here. Those are journal entries in the books of Venkatesh, that is drawer. So date is 1st January 2014. The entries are like this: Nagarjuna account debtor 5,000 rupees to sales account 5,000 rupees. So we are writing these entries due to the narration of being the goods sold on credit, and we are concluding. After that, the second date is Bills receivable account debtor 5,000 rupees to Nagarjuna account 5,000 rupees. Being the bill drawn for 3 months on Nagarjuna is the narration, and we are ending the transaction. So we have to find out the date as 1st February 2014, because Prabhakar account debtor 5,000 rupees to bills receivable account 5,000 rupees. There is a transaction of endorsement. That's why we are writing the above transaction or the entries. Being the bill endorsed to the creditor Prabhakar is the narration here. So while we are entering the second entries in the books of the drawee, so the journal entries in the books of Nagarjuna, which is known as drawee, who is known as drawee, the date is common 1st January 2014. Purchases account debtor to Venkatesh account 5,000 rupees. Being the goods purchased on credit is the narration. And the second entry for the transaction is date is 1st January 2014. Venkatesh account debtor 5,000 rupees to bills payable account 5,000 rupees. Being the bill accepted for 3 months. That's the narration. And the third entry is 4th April 2014, bills payable account debtor 5,000 rupees to cash account 5,000 rupees. Being the bill amount paid on date of maturity is the narration, and we have to underline to this narration, and we are ending this narration, these entries. And finally, journal entries in the books of Prabhakar, who is known as endorsee. We are having two types of entries. The journal pro forma is common, which is known as date, particulars, ledger, folio, debit rupees and credit rupees. The date is 1st February 2014. Bills receivable account debtor 5,000 rupees to Venkatesh account is the entry 5,000 rupees. Being the bill received on endorsement from Venkatesh. And finally, 4th April 2014 is the next date, and the entry is like this: cash account debtor 5,000 rupees to bills receivable account 5,000 rupees. The narration is being the bill amount received on endorsed bill, so it is honored, and the situation is common. So the fourth situation, now let us know the fourth situation when the bill is sent to the bank for collection. Now let us know about this one. When a bill is sent to the bank with instructions to keep the bill till maturity and collect its amount from the acceptor on the date of maturity, it is known as bill sent for collection. So it is a written order. The bank, after charging the service, credit the net proceeds to the customer account. A large number of bills are usually received by big business houses in the ordinary course of business. They may forget to present the bills on the due date for payment. That's why they are following this type of system. To avoid the risk, they usually utilize the service of bank by sending all bills received to bank for collection purpose. So this is one kind of process, and the bill, when the bill is sent to the bank, we have to follow the following procedure. So Now let us go to the fifth type of illustration.